Welcome to part 2 of banking, where we're going to take a look at bank facilities. So check us out on Pathfinder, and of course you can find many other tutors, including free study materials and others which you need to buy for all subjects, different grades and all. Let's get started. Okay, so far we've looked at introduction. We also introduced bank services. So in this video, we're going to expand on some of those bank services by looking at bank facilities. Okay. Then next video, we'll look at types of bank accounts, then the check system and the central bank. So the first bank facility is called a credit transfer. What is a credit transfer? So this is an electronic fund transfers between accounts. Okay. So you get your phone just like mobile money. You can send the money you have in your phone to another person. Okay. So that other person is going to receive the money. Okay. So that's what we mean by credit transfers. Okay. So these are just electronic fund transfers between accounts. Okay. So these ones, of course, they're instant. You do them right now, the person is going to receive money right there and then. Okay. So, and of course, they're supposed to be, or they are available the same day. Okay. They also have a feature of one debit for multiple payments. So what that means is, for the banks, if for example 10 students are paying to Blue Gum, it's the end of the month, so they want to pay the tuition fees, so they pay. Okay, 10 of them, they pay. So the total payment is going to be received as one sum. Okay, so 10, if for example the tuition fee is 1 kwacha and they are 10, so each pays, wherever they are, each pays 1 kwacha, 1 kwacha, 1 kwacha. So the total 10 kwacha is going to be received by Blue Gum. It won't come as 1 kwacha, 1 kwacha, 1 kwacha. No, it will come as a single payment, 10 kwacha. So that's what it means, one debit for multiple payments. That's a feature of credit transfers. Also, there are bank charges. Okay, just like when you are sending money on mobile money, there's always the transaction charge, the transaction fee. Okay, so even the bank, when you're using credit transfer, there are bank charges. So I expect most of you to find commerce easy now that you have mobile money. In my time when I was a student, certain things were difficult to understand because we're not exposed to such transactions, so we could just master things without fully understanding them. But now, what we're studying here is similar to what happens in mobile money. Okay, the next bank facility is called a standing order. Okay, so this is a facility used when making regular payments of fixed amounts. Okay, when you're making regular payments of fixed amounts such as rentals, hire purchase installments, insurance premium, club subscription, etc. Okay, so what this means is, if for example it's a rental, you're supposed to pay your rentals every month. Okay, so that's what it means by regular payments, which means every interval you have to be paying that, and fixed amount. Okay, so maybe you pay 10 kwacha every month and 10 kwacha every month and 10 kwacha every month, and okay, then you can use standing order. Okay, so the account holder provides the bank with a written order to regularly debit money from his or her account and pays it to the payee's account. Okay, a payee is a person who is going to be paid. Okay, so when you want a standing order, you have to write an order to the bank, okay, where you state that a given amount of money should be paid every month or at a regular interval to a payee's account. Okay, so it can be every month, every 3 months, every year, every 5 years. Okay, the money is going to be paid. Okay, so meaning that you don't have to do anything. Once you are done with this, you just have to know that every month the money is going to be paid to the payee, okay, at that particular date. Also, he or she states the name of the payee. So the name of the person who's going to receive the money should be stated. Even the account number of the person who's going to receive the money, the bank and the branch. If it's Zanaco, and which branch is it? Road branch. Okay, it has to be stated, and also date of payment and amount to be paid. When should this person be paid? Is it on the first of every month? Okay, and how much? Okay, so all this information has to be stated. It has to be stated in that order that you have to write. Okay, the standing order. Also, the bank simply transfers the required amount from the customer's account to the account of the payee as the date falls due. So, at the end of the day, the bank will be just transferring the money. Okay. Next, we look at direct debit. So, direct debit is similar to standing order, but a bit different. Okay. It is a facility that is also used for making regular payments, but only when the amounts had to be paid varies, not fixed, and is to be made at regular intervals. So the main difference between direct debit and standing order is, for standing order, it has to be a fixed amount of money. If it's 2 kwacha, it's 2 kwacha every month. Well, for direct debit, it can be a varying amount of money. It can be 2 kwacha, next time it's 3 kwacha, next time it's 5 kwacha. Okay. It may be used, for example, when paying electricity, water, and telephone bills. Why? Because electricity, it's highly unlikely that you may be using the same amount of electricity every month. Okay, maybe this month you use 1 for 1 kwacha, next month you want for 1 kwacha, just like that. Because the amount varies, you need direct debit. A business may also use it to pay for supplies obtained on a regular basis. If a business and maybe like ordering sweet potatoes from Chipata, okay, so the suppliers in Chipata, you can be paying them using direct debit, provided that you get different amounts of candle or sweet potato. For example, you get maybe this month you order 500 kwacha. You order sweet potatoes or candolo for 500 kwacha. Next month you order for 200 kwacha. So because the amount varies that you're ordering, you can be paying them using direct debit, provided you order on a regular interval. That is, maybe every month on a specified day of the month you are ordering. So what is important is it should be regular interval. The amount can vary. Well, for standing order, the amount is fixed. Okay, now let's take a look at the difference between a standing order and a direct debit. Okay, so a standing order has the amounts are fixed. Okay, so if it's 200 kwacha, it's going to be 200 kwacha always. Well, for a direct debit, the amount that has to be paid varies. Okay, meaning that it's not a fixed amount. Okay, so that's one of the key differences. The second difference is a standing order. It is the debtor who takes the initiative to instruct his or her bank to transfer money to the creditor's bank account. What does this mean? You who is supposed to pay someone money, you are the debtor. So it is you who has to pay, or who is expected to pay money, who takes the initiative, meaning that it's you who plans and informs your bank that money should be transferred from your account to the person who is supposed to receive the money, that is the creditor's bank account. Okay, so money is going to be transferred from you, that is the debtor, to the creditor. Okay, well, direct debit, on the other hand, it is the creditor who takes the initiative to instruct his or her bank to transfer money from the debtor's bank account, meaning that in this second scenario, the person who is expecting to be paid is the one who is going to instruct his or her bank to have money transferred to his account from the debtor's bank account or from the person who is supposed to pay. Okay, so that's the difference. Okay, here it is the person who is supposed to pay who initiates. Here it is the person who is supposed to be paid who initiates. Another one is the amounts can not be increased or reduced. So in standing order, okay, we're talking about fixed amounts, hence they cannot be increased or reduced. Or in direct debit, they can be increased or reduced because they are not fixed. Okay. Then another key difference is in a standing order, payments are made on fixed dates. So if you are going to be paying on 28th of every month, then you have to be paying on the 28th of every month. In direct debit, on the other hand, payments are made on varying dates as much as they are regular payments, meaning that you have to be making the payments on a regular interval, maybe every month, but the actual date can vary. Okay, so those are the differences between standing order and direct debit. Let's take a look at other bank facilities which you may be familiar with. Okay, so the first bank facility, not the first, I mean the other bank facility that we're going to take a look at is a credit card, which of course looks like this one on your top right. Okay, this is not an ATM card. They look similar, but it's not. This is a credit card with a different function. You can't use a credit card to withdraw money from an ATM machine. Okay, so a credit card is a card that enables the holder to buy goods and services on credit from certain businesses. Okay, there are certain businesses which are registered with credit card companies. Therefore, if you go to those businesses, you can buy goods, and of course you can pay for services using the credit card, but on credit. Okay, so credit card companies such as Premium Card and Visa issue the cards. So these credit card companies are the ones that give people the cards. So to buy goods from the registered business card holders, simply present the cards to the cashier and sign the invoice. That's all. Then the business that have sold goods to credit card holders will then send the invoice to the credit company. Okay, so the stages are simple. You want to buy some goods from a business that of course is registered with a service, is registered with a credit card company. So you just have to present your credit card and then sign what is called the invoice. Once you do that, then they are going to claim the amount you have bought the goods on from the credit card company. Now the credit card company is the one that's going to deal with you. So that's how it works. Okay, so far we have talked about two stages that are involved in the in buying things using a credit card. The first is you present the credit card and sign the invoice to the business you are trying to buy things from or pay for a service. Okay, the second is the business has to get in touch with the credit card company. Okay, so the third stage from there is once the credit card company receives the bill, that is the bill of the goods you have bought or the services you have paid for. Of course, it's on credit. Okay, the company is going to pay for you. So the company is going to pay for you, but with less commission. They have to make money as well for the service they're offering. So they're going to get a commission. Then after that, they're going to charge the cardholder's account with the full invoice price. Okay, so it can be in a situation where the cardholder maybe the account has no money. So whenever there will be money, then of course they are going to deal with that. Okay, the idea is to allow the card holder to buy things on credit when they don't have money. Okay, so there are basically 4 stages. Stage 1, you present your credit card and sign the invoice. Step 2, the business that you have bought or paid, the business you have bought goods from or paid for a service, they are going to get in touch with the credit card company. Stage 3. Step 3 involves the credit card company are paying on your behalf, less a commission. Step 4 or stage 4, then the credit card company is going to charge you. So these are the 4 stages that are involved in the credit cards usage. Okay, now what are the advantages? What are the advantages? Some of you by now, you may have figured out the advantages of using a credit card, but let's take a look at them. So the first advantage is because people can buy without money, so the number of goods that are sold in a given space of time is increased. Therefore, there is an increase of sales. Okay. Second, it allows credit. It allows people to buy on credit. Okay. And third, it can be used for large amounts. So credit cards can be used for buying large amounts of credit cards can be used when you want to buy items or you want to pay for services that need large amounts of money. Next, we look at this beautiful facility which most of you are familiar with. I'm sure all of you know what this is. An ATM, automatic teller machine. Okay, ATM. Okay, so the other name for an ATM is a cash dispenser. Okay, cash dispenser. It dispenses cash. Okay, so what is an ATM? So these are machines from which account holders can withdraw money. So this is a machine you go and get physical cash. Okay, so they are situated outside the bank building, so money can be obtained 24 hours a day. Okay, maybe you need money at 23 hours. The bank is closed by then, so what are you going to do? You just go here and withdraw your money. Okay, so the customer is provided with a coded plastic cash card. The ATM card, the one that looks like the credit card we are from looking at, and the secret personal identification number or PIN. So don't forget, PIN means personal identification number. Okay, so sometimes you're talking to a friend, you want to sound educated, you can say, I've forgotten my personal identification number, instead of just saying a PIN. Also, avoid saying PIN number, because when you say PIN number, you are simply saying personal identification number. Okay, so it's just a PIN. Okay, so here we are discussing on how the ATM works. So you the user has to have a card called the one that we call the ATM card. Okay, then also they should have a PIN. Okay, so now the process is to obtain money from his or her account. The customer inserts the card into the machine. Okay, so they will put that ATM card into the machine and then enter the PIN. Okay, and also the amount they want to get. Okay, so those are the processes. Then the machine will give the money provided there are sufficient funds. Sometimes ATMs don't have money, but if they have money, they are going to give out money. Okay. So so what are some of the services that those machines, the ATMs, provide? The first is they can give you a mini bank statement. A bank statement, it's a record that shows your transactions. Okay, so they can give you a small bank statement. Okay, but of course, if you want a big bank statement, you have to go to the bank. Okay. Also, you can use the ATM to sort out utility bills. That is to pay for utility bills. You want to pay for electricity, you want to pay for water, you can use the ATM. But of course, it depends on the bank. Some may not have certain utilities, and some ATMs may have, depending on the bank. Also, you can check your balance, how much money you have in your account. Okay? You can also do balance transfer called BTF, okay, where you transfer balance to another account. So, what are the advantages of an ATM? The first is cash can be withdrawn at any time, and again, we can also say that it's available 24 hours a day. Okay, and because of this, it ends up saving a customer's time. It's different from when you try to withdraw from the bank. Okay, also inside the bank you may find long queues. Okay, or as we like to say in Zambia, long lines. That is, people are queuing. Okay, so because of that, you may end up wasting a lot of time trying to withdraw money. But if you go on an ATM, it may be a different case. But some banks don't have many ATMs, so you may have one ATM and still you're going to have a queue. Nevertheless, there's no need for queuing in the bank for cashier services. Okay, another advantage is they are quick and easy to use. Okay, also they give a mini bank statement, which is a very important feature. A bank statement is very important because it helps you see how your money has been used, or if you suspect that maybe your money has reduced mysteriously, you just have to check your bank statement. Now, going to the bank all the time to get a bank statement is not an easy process. Again, depending on the bank, okay. But if you can quickly access the mini statement, then that becomes great. So this marks the end of this part of banking. See you in the next lesson.